minds and money connect online. You are at the Keynote Fireside Chat with special guest Mark Bristow. He is CEO of Barrick Gold. Welcome, Mark.
Thank you, Michael.
My name is Michael McCrae. I'm Mining Audiences and Data Intelligence Manager with KITCO News. Mark, your company made headlines of the year in our sector when Warren Buffett added the ticker GOLD to his portfolio. Now, in the past, the world's most successful investor has said some tough things about precious metals, and we get that gold prices are up. We get that there's uncertainty. We get there's inflation coming. But can you talk about what happened at Randgold and Barrick when you did the merger? What were some of the key changes that you wanted to make that you could arrive at this point?
So, Michael, one of the things that I've always said about mining is that we need to build a business platform on which we can deliver. And we did that, as you know, back in the legacy Randgold story. And we saw the opportunity I think I communicated for some time that mining companies needed to become more relevant as businesses. And we had got to a point in Randgold Resources where we felt we could lever both our skills and our assets. And so we talked a lot to many of the leading gold companies, but kept coming back to Barrick because it dominated the quality of portfolio. And so, over a period of 2 years, I convinced John Thornton if we put these two companies together, we'd be one, global. And I believe if you want to be a world-class miner, you have to be global. And two, we had an opportunity. We saw the value embedded in his portfolio, and we saw the opportunity to leverage the Randgold Resources cash flow and really deliver value. And again, my long-standing view in mining is that historically, always the people that don't do so well and get bought out by the people that are doing well, they get the premium, and the people who are doing well and can change things have to pay the premium. And so that you don't get a real uplift for all owners. And so we really, I think we convinced our boards and our shareholders this was the right thing to do. And as you know, we followed that with the Nevada joint venture, and then we're taking Acacia private. And the benefit of that is embedded in our business plan. You hear me talk about the 10-year plan all the time. And what this gold price increase has done is really fast-track that strategy.
What is the 10-year plan? Because I do notice you do hammer it every time that you're on business press.
So, I try and present Barrick, as I did Randgold Resources, as a business first. We're a business focused on gold. We're not a gold mining company just focused on mining and producing gold. And so there are three key steps to that. First of all, if you want to be a business, you have to have good business people. So we focus on quality people. If you want to deliver value, the best way is to combine those best people with best assets, and then of course the result is the delivery of the result is a given. And so for me, that's the real key, is that we put those things together. And if you go back to legacy Randgold Resources, you could look at our income statement and balance sheet. They were connected, and they looked like any other public company. And we are working towards that. We're not quite there yet. And the 10-year plan is about giving people and investors particularly a vision of what they're investing in, like any other company would give. And so that, at the end of the day, it's pleasing for me already to see analysts starting to deliver models that are aligned with our own business plans. The objective then is that an investor can take an assumption on the gold price and understand what dividend he'll get or she'll get, and have an appreciation of what the financials are going to look like. And then you start attracting generalists into the mining industry.
Now, when we asked the first question, I think that you hinted at it before when you're talking about it, but we've had these bull cycles before. It did leave a sour taste in some people's mouth for the investors that came out of it. But what were the lessons that were learned from the last bull cycle? Because you always, if you're not talking about the 10-year plan, you're always talking about discipline.
So, I think what's very important is that we have that experience, the dilemma of that when the gold price, and remember the gold price increased, it doubled from 2008 to 2011, and no one made any real money. In fact, the industry as a whole, only in 2 years in that period did it generate free cash flow. And that was because the gold price was going up faster than the mining industry could spend the money. What we introduced is a discipline, the magic $1,000 long-term gold price, and a look through, because we were sub-Saharan Africa, a 20% return. We were looking, we didn't have the big assets we've got today, and we stuck to that strategy. And if you look at the legacy Randgold Resources share price until such time as we delisted in 2018, or the end of 2018, you see that we separated from the rest of the industry, outperformed the gold price and outperformed the GDX, and that was because we kept that discipline. And also, mining companies should be built at the bottom of the cycle or through the cycle, but not only at the top of the cycle. And we've if you look back through the cycles, it's always been that. And certainly since sort of the early 90s, the gold industry in particular didn't do well at delivering value for its stakeholders during the cycles. And this is why people invest in gold mines primarily. And what we want to do is we want people to invest in us and own us. We don't want people to invest in us. We'd like owners as shareholders.
Can you explain that again? What is the advantage of having people that are owners, and what does that provide to the company? If
you're a gold business or a metals business, any sort of diversified company, and you've got to be very careful that you don't get caught by the commodity cycle. And so you need, because what happens then is you can't raise money from your traditional shareholders if you're selling to specialist investors. So you can't make money. So you end up being owned by hedge funds, and it destroys your capital fabric. You dilute the value per share, and there's many examples. I don't have to take you through them post 2011. And so that's why I've always liked to be independent of capital markets. I like to have owners that understand our business. And really, if you can demonstrate, and the other aspect of the 10-year plan is it demonstrates that Barrick will work itself through all the cycles without requiring equity. And if you do that and you're disciplined and you focus on that, you eventually start growing that value per equity.
We do have generalists that are coming to the space. What do you tell Mr. Buffett, or what do you tell any investor that might be new to the mining sector? Now, gold is a contrarian play to some extent, and then that's why it's had that piece. But again, if you have people that are coming to it that are new, how would you like to explain how the mining industry might be different?
So, Michael, in the last 4 years of our existence, we ended up as on a 10-year look back in the top 50 and then the top 75 of all public companies listed around the world as performers. And so you can create value from mining, very much so. If you go back to the 70s and the 80s, whether it was gold mining or other diversified, we used to deliver as mining industry returns to our owners. So, that's what I've tried to emulate. And as generalists, what we offer them is a real return, a yielding investment, because we pay dividends. That's one of our objectives behind the Barrick Randgold deal. And Randgold paid increasing dividends for 13 years in a row, right through that cycle of 2011. And so, that's what we say is that, you should, over time, get returns that exceed the average return you get by, a long-term investment. And in in crisis times, as we've had, experienced in the last decade, we've had two. You should make a lot more. And, there's plenty of work, particularly by the World Gold Council, of why a 5 to 10% gold position in one's portfolio protects you from times like this.
Let's talk about news. Can you bring us up to the situation in Mali right now?
Yes, Mali is, we went through a similar but different change in regime in 2012. This one was coming for a while. There are, as Mali is dealing with, security issues in the central and northern part of the country, and it's been struggling in its whole political structure. And the ECOWAS and the African Union have been involved in trying to find a solution. You saw that the president and the prime minister struggled to put together a cabinet recently. There's been a lot of engagement by those two key institutions and the various political movers and shakers in Mali. We had the coup just recently. It was led by very senior military figures within the army. It was very definitely not as wild as the last one. It was well considered. The government stayed very much in control. What happened was that because there was a push by civil society and the opposition parties to try and create a more conciliatory government, keep the president maybe, but look at a conciliatory movement, and there was some resistance to that. So the process very quickly translated into the ECOWAS stroke African Union action committee has been in the country for the last week. We are now working towards a 22-person transitional council. 16 of those will be civilians. And the ECOWAS has very clearly pointed out how it sees this transition to going back to elections and civilian rule. And where the timing is 9 months. That might be a little ambitious, but at least it's not. People are starting out by saying we need to get back to civilian rule, and in the interim, all the ministries are still operating. The professional, what we call secretary generals, which are effectively the professional deputy minister, have been appointed as acting in each of the ministries, and business is going on as normal, and there's no specific motivation other than a more representative government accepted, and one that has the authority to engage with dealing with the security situation, particularly in the north.
I think that segues into discussion about environmental social governance. If you're somebody that's going to be investing into the sector, it really matters what your stakeholder relations are with the local communities and understanding them.
And I think that's the case for any business nowadays. More and more is the whole license to operate. And I don't. Whilst the forces might be different, the requirements of being a legitimate operator with a license from the community and your host country to operate is absolutely critical. And I think a lot of people used to use ESG and the whole social issue as a sort of feel-good tick-a-box plan. But now it's certainly for me, my whole career, I built a business in sub-Saharan Africa. You've got to have a license to operate, otherwise you've got to facilitate your business, and we don't do that. So we've really built and worked on those relationships. On the merger with Barrick and Randgold, there were some very critical issues that we had to deal with. The one that we got to a little too late was the Papua New Guinea issue, but we're working on that one as well. And license to operate is absolutely critical.
You're a gold miner, it's in the name, but you do have a sizable copper production as well, and copper has made a significant move. Could it have any sizable lift for coming quarters?
Yes, I mean, copper, the team's done exceptionally well. We put it back under the different regions, so we don't have a copper division. But all the copper operations have done well. Chile has been challenged because it was busy with an expansion when COVID hit. Limon has done exceptionally well. Last quarter was the best quarter they've had. The copper mines contributed to the bottom line for Barrick in quarter two, and that, as you know, is a low copper price period. Moving up, of course, it makes significant contributions, but gold does too.
One of the things that you always lead also within your quarterlies is talking about digitization and automation. Let's just talk about the future. And you've been in this for a while, but if you're looking at a mine, say 10 years out or 20 years out, what do you imagine is going to be the biggest difference or biggest change that somebody might see?
So less people in sort of dangerous places as we go. I mean, we've got an example already in Kibali, which is in a very remote place. A lot of people say, digitization, automation takes away jobs. It's nonsense. It really does empower in country, particularly in the developing world. And Kibali now, we don't touch the rock, and after it's blasted, once it's blasted, we don't touch the rock again until it's in a bar of gold, and with a manned machinery, just the drilling, and that goes all the way through the crushers into the skip, out of the shaft, and into the mine and its process. So, and we automation allows us to use talented operators which don't have any long-term experience, and so you do away with the expatriates. You uplift the quality of work from your host country, so it really does work. And then on the digitization side, Randgold Resources, we used to make decisions what are called intra-shift, during the shift, because we had real live data. Barrick, when we got involved, was every 45 days. You could see the total picture. We're now down to weekly, and we've just rolled out the new SAP platform, which we bolt everything onto. We're going to be upgrading our SAP platform in Africa as well, and by end of next year we'll be real-time data. And the way we've rolled it out is we've trained our managers and supervisors, so we will have not only the digital platform, because that's the thing that's missing most of the time, and it's a big effort, but we'll have our own super users are our managers, and that'll allow us really, and it makes my job easy. You can, and particularly things like now we are already able to run sensitivities, really understand where we're going, and that's what mining's got to do if it's got to keep up there and be able to iron out all those margins that we're not exploiting at the moment as businesses.
I know we're getting close, but I just want to tie into that last question. How are we doing right now with renewables?
So, Barrick is very fortunate. Randgold Resources started with diesel generators in Mali. We've just introduced, we're busy commissioning a big solar farm there. We moved to heavy fuel and became more efficient. Kibali, we've built 3 hydro power stations. We're busy doing away with the coal power station we own in Nevada and changing it to natural gas. We just worked with the industry, that's the power industry in Dominican Republic, to convert all that to natural gas and from diesel. And we're busy with the project of bringing that power line across from Chile to Argentina, which takes away the diesel power generation and introduces, as Chile is the most renewable energy out of any grid, a national grid. So we're working that way. We've got a clear target out to ahead of us, and what makes us different to most is we've got a plan to get there, rather than just a promise to go, to reduce your and we measure greenhouse gas emissions and water reuse. We think water is as important. It's a very precious commodity. And so we measure those two criteria in our ESG scorecard.
He is Mark Bristow. He is Chief Executive Officer with Barrick Gold. I want to thank you, Mark, for making time for speaking with us at the Keynote Fireside Chat at the Mines and Money Online Connect. So thank you very much for your time tonight, Mark Bristow.
Thank you, Michael, and thanks to the organizers.
Much appreciated. Thank you very much.